Hi, my name is Nasser Sheikh and I'm a Chartered Certified Accountant with Hoffman & Kern, a firm based in Knightsbridge, London. In our previous video, we've compared the tax effects of holding the property portfolio under the personal name versus holding the property portfolio under a limited company. I've now been requested by a number of our clients to create a video on how to transfer the property portfolio from a personal name to a limited company. I would assume that you have viewed our previous videos, and remember that tax advice is based upon individual circumstances. It's extremely important that you discuss your affairs with your accountant or a suitably qualified accountant. Okay, so it's now time to talk about the fun stuff. Transferring properties from personal name to a limited company is deemed as disposal at market value by you and is also deemed as acquisition at market value by the company. This means that you may be open to a potential capital gain tax liability, while the company may have to pay stamp duty, land transfer tax. You may also need to consider the early repayment charges that you may need to pay by repaying the mortgage early, while a potentially higher interest rate that may be charged to the company or may be available to the company. Let's assume that you've already thought about these consequences and have actually taken care of them and have crunched the numbers, and you're ready to take the plunge and transfer the property portfolio to a limited company. Let's also assume that you have a property portfolio big enough for the transfer to have any tax savings value, that you are the sole owner of the properties, and also spend considerable amount of time in running your property rental business. In simple terms, upon transferring the property to a limited company, no capital gain tax may be payable by using incorporation relief. Great news. Relief. We love reliefs. In light of Ramsey's case, it is indicative that incorporation relief will be available when the individual spends 20 hours or more per week working or undertaking the sort of activities that are suggestive of a business. Now you know that the aim of this video is to provide you with options that may then be further explored, I would say with your accountant, who will then be able to ascertain if incorporation relief applies to your personal situation. Remember, I said that tax advice is based upon case-by-case basis, so please discuss incorporation relief with your accountant. So you may now breathe a sigh of relief if you've been holding your breath and knowing no capital gain tax may be payable. Great news, isn't it? Well, I would say it is till you find out the stamp duty land transfer tax may still be payable. Now I'm aware that a number of advisors are suggesting BICT, also known as Beneficial Interest Company Transfer. However, I still have not been able to convince myself if BICT structure works, or have not seen in cases where the taxpayer has successfully argued the structure with HMRC. However, I'm in no way suggesting that the structure does not work, but this is a topic for some other day. It's quite a lengthy topic. So, if SDLT is payable in transferring the property portfolio to a limited company, then you may be thinking you really don't have any options, do you? Well, I must say, you most certainly do. Now, do I see a question with a hint of lopsided smile? Alright, well, that's good. That's good. Questions are great. So, you're wondering that if there's really an option where you pay no CGT or no SDLT when transferring the property to a limited company. That's your question. Is there really an option? My answer would be yes, there is. And that would be if a partnership exists. Now, do I see a slump in shoulders now? Come on, you have not let me finish it, so buckle up and wait for it. You may not be aware, but if the properties are jointly owned by you and your spouse, then partnership may very well exist between you and your spouse, even if you never thought that it did. See, I told you that I'm going to have some good news. In simple terms, partnership is a relation which exists between persons carrying on a business in common with a view of profit. That's the legal definition of partnership. So, if a property partnership exists, then a relief of up to 100% of the STLT charge is available. Simply, full relief from STLT may be given as long as the ownership of the new company matches the original partnership shares. Can you at least give me a full smile now? I just gave you great news. So, of course you're giving me a smile, but you're also wondering that, if incorporation relief can be claimed while no STLT is payable, then what is really stopping everyone from transferring the property portfolio to a limited company? It is a good question. I know it is, and as explained in our earlier videos or on this video as well, the tax advice is based on individual circumstances, and for many, the transfer may not be a viable tax saving proposition. Also, the transfer does not come really risk-free, and you should also be aware of a number of traps that could be avoided but may be associated with transferring the property to a limited company. Now, those traps could be, there are many. I'm gonna try and cover them all. As I've said, higher interest rate that may be offered to the company, which may swallow your entire tax savings. Also, early repayment charges that you may have to pay when repaying the mortgage would also pose a massive dent on the tax savings. Plus, you may not be spending enough time in running your rental business, which means HMRC may successfully argue that no business was transferred and therefore no incorporation relief applies and CGT is payable. Lastly, if the property is owned between husband and wife and a deemed partnership exists, as explained earlier, but not a partnership which is registered with HMRC or an LLP, then HMRC may be successfully able to argue that no partnership exists and therefore STLT is payable. As you can see, that none of these traps are game changers, and you can certainly avoid these traps by shopping around for better finance charges. You can also discuss your situation with your accountants to ascertain if you spend enough time in your rental business for incorporation relief to apply, or may even register a partnership to avoid the STLT trap. In the end, the risk and reward is yours, and the aim of this video is to provide you with an eye-opener to show that all is not lost and you may end up as a winner, but of course after carefully discussing your circumstances with a suitably qualified accountant. I'll keep saying it, it's very important. Now remember, this video is made for illustrative purposes and should not be deemed as an advice. On this note, I wish you good luck and have a great day, and I'll see you again next week. Take care.